Hi, Professor. This is Annie. Our group is going to talk about two companies, which is Canon and Nikon, and our other group member is Harry, Niha, and Pavasi. So let's begin. So firstly, I will briefly talk about the introduction of the Canon and the Nikon company. So the Canon is a Japanese multinational corporation. It is specialized in the manufacture of imaging and optical products, including cameras, photocopies, steppers, computer printers, and medical equipment. The headquarters is in Tokyo, Japan. For the first quarter of 2017, the company has regional headquarters in America, Europe, Middle East, Africa, Japan, Asia, and some and else. And the Canon Europe has two principal subsidiaries: Canon Europe NV and the Canon Europe Ltd. So Canon is organized into three principal business segments. The first one is the office business unit. The second is consumer business unit and the industry and others business unit. As for Nikon, it is also a Japanese multinational corporation. It is also headquartered in Tokyo, Japan. It is specializing in optics and imaging products, including cameras, camera lenses, binoculars, and microscopes, and so on. Devices from Nikon enjoyed high demand from global chip makers, and Nikon becomes the world's leading producer of semiconductor system until the 1990s. In recent years, AMSL, which is a Dutch company, has grabbed over 80% of the global market in 2015 by adopting an open innovation method of product development. Nikon saw a sharp drop in its market share from less than 40% in early 2000 year. Since these two companies are all multinational photography and imaging companies, so they share very similar uh, competitors. So as you can see for Canon, it has Nikon, of course, and also Sony and Samsung, some companies like this, and also and you can see for Nikon, it also has Canon as its key competitors, and also Samsung, Sony, Fujifilm, and ASML, as I just mentioned before. So both of these companies have very rich history. I will just briefly talk about their timeline. So for Canon, it was founded in 1933, and the Canon's New York branch office opened in 1955. And for last year, Canon's digital SLR camera is launched. So as for Nikon, it was founded in 1917s, and with the end of World War II, its production shifts to cameras, microscopes, and lenses. 1988, corporate name is changed to Nikon Corporation, and for the last year, the Nikon Museum was opened. So as you can see, there are many business drivers for the Canon company. So firstly, it established a new production system to achieve a cost of sale ratio of 45%. And also, it can reinforce and expand new business while creating future business. Then actually this point is shared with Nikon company. It enhances R&D capacities through open innovation, and also it restructures the global sales network in accordance with market changes. For the Nikon company, it has worldwide locations and has high market occupancy and a strong brand equity. And it also has major advancement in R&D development, and the new technology provide Nikon with industry-leading technologies and exclusive brand offerings.
Risk factors for Canon includes intense competition from key competitors on a variety of factors such as advertising, price, quality, etc. Bolster strengths of existing core businesses by creating outstanding the products. Since Canon works on SME, that is small and medium enterprise, and Soho, that is small office and home offices across Europe and Russia, they either lacked in skill in performing that way or had little time to do the paperwork. Exploring new dimensions of cost reduction is also one of the risk factors for Canon. Selecting and concentrating on technological theme that will lead way to the future is another risk factor that has been listed on the Canon's website. Risk factors for Nikon includes unique business environment and circumstances. The industrial metrological business is susceptible to the effort of economic and facility trends of various industries, including semiconductors, power generation, electronic components, automobiles, and machine tools. Such changes in the business environment are likely to have considerable impact on business performance and financial position of the Nikon Group. The second risk factors listed for Nikon is ability to develop new products and investment in development. Being subject to intense competition, the Nikon's group core business are constantly required to develop new products by continuing to engage in highly advanced research and development. Therefore, it is necessary to continue to invest in product development regardless of the fluctuations in the group's profit and securing key personnel. The Nikon Group is supported by its employees who possess advanced technical and other expertise and abilities. Thus, securing such human resources becoming increasingly more important in order to win through intense competitions in the market. The company's gross margin showed no year on year improvement. In spite of this, the company's earnings rose, influenced primarily by improvement in operating margins from 12.58% to 14.17%. For comparison, gross margins were 47.67% and margins were 14.96% in the last period. Companies sometimes sacrifice improvement in revenue and margin in order to extend friendlier terms to customers and vendors. If the gross margins improved without a worsening of working capital, it is possible that the company's performance is a result of truly delivering in the marketplace and not simply an accounting prop up using the balance sheet. The company's earnings growth has also been influenced by the following factors, that is, improvement in operating EBIT margins from 5.03% to 7.78% and one time items. The company's pre tax margins are now 8.02% compared to 5.74% for the same period last year. For Nikon, the company's year on year earnings decline did not come as a result of a contraction in gross margin or because of any cost control issues. Both gross margin and operating margins actually improved over this time frame. Gross margin went from 39.95% to 40.43%, while operating margins improved from 10.63% to 12.23% over this period. For comparison, gross margins were 39.92% and EBITDA margins 9.45% in the immediate last period. Companies sometimes sacrifice improvements in revenues as detailed earlier, and in case of Nikon, despite an overall improvement in operating EBIT margins, the company's earnings fell. EBIT margins went from 6.45% to 8.49%. The decline in earnings appeared to be largely because of one-time items. Pre-tax margins declined from 6.37% to minus 4.95%.
So let's have a look at the street positions of these two companies and what do the analysts recommend about them. For Canon, 61% of the analysts recommend that you should hold the stock, and according to the share price forecast, it will go up to 4,400 with minimum being 2,373. For Nikon as well, 44% of the analysts recommend that you should hold the stock, and the share price would go up to 2,100 and could go also as low as 1,300. We have compared the two companies using horizontal and vertical analysis. Horizontal analysis, also called as trend analysis, is a technique for evaluating a series of financial statement data over a period of time. Its purpose is to determine the increase or decrease that has taken place. This change may be expressed as either an amount or a percentage. It's calculated by using the formula current year amount minus the base year amount, the whole amount divided by the base year amount. Vertical analysis, which is also called as the common size analysis, is a technique that expresses each financial statement item as a percentage of the base amount. For the balance sheet, we divide each item on the balance sheet by the total assets, and for the income statement, we divide each item on the income statement by the net sales. From the horizontal analysis of the balance sheet of these two companies, we see that the goodwill factor for Nikon has increased by more than 100% as compared to Canon. But as you can see that the treasury stock has gone highly negative for Nikon, meaning that the stock has been used up in the last year 2016. Long-term debt for Canon has gone up by almost 10 times in this year. Horizontal analysis of the income statement shows that the net income for Nikon has increased from 2015 to 2016, whereas for Canon it has decreased highly. The interest expense for Canon has increased over the time period but decreased for Nikon over the same period. We also see that the total revenue for both the companies has reduced for the last year. Vertical analysis of balance sheet. The graphs show that for Canon, cash and equivalents, net receivables, current assets, net tangible assets, and the long term investments have decreased from 2015 to 2016. But there has been an increase in common stock, long term debt, and goodwill. But for Nikon, owner's equity and treasury stock have declined greatly, but the company witnessed a growth in cash and other current assets. Overall, the performance of both the companies has been improving in this period. Vertical analysis of income statement. From this graph, we see that the total revenue and net income for Nikon has remained same over the 2 years, and for Canon also the total revenue and the R&D department has remained the same. Interest expense, operating income have decreased for both the companies over these two periods. The cost of revenue and total operating expenses have risen for Nikon as well as for Canon.
So now we are going to look at two different kind of ratios called efficiency ratio and liquidation ratio. So efficiency ratio has inventory turnover ratio, which is it shows how effectively inventory is managed by comparing cost of goods sold with average inventory over a period. And then you have asset turnover ratio that measures how efficiently a company can use its assets to generate sales. And finally, you have the receivables turnover ratio, which is an activity ratio measuring how efficiently a firm uses its assets. And then you have liquidation ratios, which consist of first a quick ratio that measures a company's ability to meet short-term obligations with its most liquid assets. So these are assets that can be converted to cash within 90 days. And then the current ratio is which is a liquidity ratio that measures a company's ability to pay short-term and long-term obligations. And profit margin ratio, also called as the return on sales ratio or the gross profit ratio, that measures the amount of income earned with each dollar of sales generated by the company. So let's see more on these. So when you look at the receivables turnover ratio, which is like has quite an amount for both Canon and Nikon. So it is for Nikon, it has increased from 2015 to 2016, whereas for Canon it has slightly decreased. Also, the receivable turnover ratio of Nikon is much higher, which indicates that Canon does not have a very effective usage of its assets. And then you have the asset turnover ratio. So Nikon's asset turnover ratio has been decreasing gradually. So on 2016, the number is around 0.86. So which means that for every one N asset, it generates 0.86 cents of sale. Whereas for Canon, even for it, it has been decreased from 0.823 to 0.721. The decline is pretty much not favorable for Canon. And then you have the inventory turnover ratio. So it has decreased from 2.345 for Nikon, which means that the company sold its total average inventory 2.345 times a year. And then you have the current ratio. So the current ratio is Nikon has a pretty steady current ratio from last 2 years. So compared to 2015, the 2016 has had a pretty small decrease, but then it has been kind of stable throughout the year for the 2 years. Whereas for Canon, it has been on a constant decline. This is because of the increase in its liabilities and not so much improvement in its current asset value. Now, even though the Canon was performing better in 2015, but then it has taken a turn on 2016 where Nikon is slightly on the higher edge. And then finally, you have the quick ratio. Overall, I could say that Nikon has a pretty good short-term liability performance. So from if you can see from 2010 to the current year, the quick ratio has been constantly increasing. However, from 2015, it has been on the decline, like from 1.37% in 2015 to 1.21% in 2016. Whereas for Canon, even though the quick assets increased, so did the liabilities, and hence it has a high ratio in the latter year. However, when compared to Nikon, its performance is slightly at a better position. So, if you can look at the comparison between these three, the EPS ratio, the PE ratio, and the payout, so it's pretty much evident that Canon seems like a better buy on paper considering the above ratios, but only the ratios values aren't sufficient to make an investing decision. Like if you can see for Canon, it has been on the constant decline from 2015 to 2016, whereas the same thing for Nikon for EPS. And for P ratio, it has been an incline for Canon but a decline for Nikon. And for the payout ratio, it has been declined for both these things. So pretty much, if you can see, if you look at the sales figures as well as the net income, we can see that Nikon now has a much higher position than Canon. So I mean, these analysis that we did, it was considering the 2016 data. But if we look into 2017, we can see that Nikon has a negative income for the first quarter. But from the beginning of the second quarter, we see that the results have been again started to be in favor of Nikon. So for now, analysts have voted for a strong buy in the month of June 17 for Nikon, whereas for Canon, they still have it underperformance. So a strong buy, which basically means that investors can buy as much as stock they want because they see a potential of it in performing well in the market. Whereas for Canon, it suggests that the company is currently not doing well in the market. So the following analysis is based on the factors. First is the earnings of the company, second is how quickly the assets are liquidated, and third is any previous liabilities, and fourth one is how fast the company pays its creditors. So based on the statistics provided, it's seen that Canon and Nikon are companies who find themselves on similar turf because the values are kind of similar. Their value ratios are almost identical and fall in line with industry averages, but Nikon is kind of expected to see more positive growth in the future. Now, the numbers say that Nikon is better retail stock right now and it is the safest addition to the portfolio due to its strong momentum going forward. However, Canon also continues to be a strong presence in the industry, but we are not sure how long is going to last. Hence, it's pretty evident from the ratios, the analyst recommendations, and everything that Nikon currently has a higher hand compared to Canon. Now, you can see that the estimated sales for growth of 15.20% for Canon, but for Nikon, the sales growth is not really growth for the next quarter. But as you can see from the Q1 2017 data, Nikon is kind of like making more sales compared to Canon. Now, even though Canon is outselling every other DSLR camera in the market, like its share is 54.75% compared to 31.1% for Nikon. But as I just said, based on the analyst recommendation and the ratios and the growth in which Nikon is growing currently, I'm pretty sure it can go to 56.90% in the next 5 years, whereas Canon's growth is kind of restricted to just 3% increase. So we can say that the two stocks have similar valuation based on the next year's EPS, but Nikon is kind of expected to have more returns in the future. So if you're looking to buy a stock and investing it, I would say prefer Nikon compared to Canon.